This morning, let's see what we got here. I like this buy side pull here, right? Equal highs created in London. If you notice as well, right? So for one, both of the areas we had marked out yesterday ended up being traded to, right? So we came down first into that inefficiency we had marked out. You see how we respect that? 1, 2, 3, 4 times. And then we ultimately from here, right? So we trade into the discount. We then reverse to clear out that buy side that we had talked about. And I like this buy side here because if you notice, right, we've actually created equal highs with this old buy side pull here. So yeah, I would like that actually. So I'm just gonna leave this high here. Which it looks like we'll actually come into that before news even hits. If we can get a retracement before that, I'd look to go long, but yeah, I had an echo too. I think someone's unmuted. They muted themselves now though. So this is an instance where probably just gonna run without us, right? I had an order set here at this volume imbalance. Seems like we're gonna run into that buy side first. So we've actually ran the high already here in NQ. So a few things. This news can give us kind of a six sister, right, approach concept to where we try to catch up with NQ and just run through this high, right? That'd be ideal. Or if we start breaking underneath, right, this fair value gap, which is the 15 that I was looking at. So we get above the 15 here. There's also another one here. So if this closes, right, we will have created two inversions, as well as look at this little volume imbalance. One minute till news. Let's see what we get. I'd like to see, right, just that buy side here. Pretty slow opening so far. So still hovering on that buy side. Right, and I'll show you what I was speaking about here in NQ. To where we haven't hit London's high yet, but NQ has actually ran up and through that. Really, I think we could still hold from right this. So this 1 minute fair value gap here. If we were to get back underneath this, right, closing underneath it, then I actually would look for right midnight level and then potentially some of these lows. Because you see we have a lot of unattacked lows, right? Liquidity here, 1, 2, 3, right? 4, 5, 6, 7 now. So if we can't hold this bullish structure that we're putting in off of this high impact news, then I would look for a return just lower into some discounts, right? I still prefer buy side, so that's kind of what I'm waiting for. But we kind of have our area of interest to where if we flip underneath that, right, our bias will switch up in the short term, at least anyway. And right, we're just smacking into these volume imbalances right now. So we're hitting the highest premiums just above or just before we can get to the actual external range liquidity. Nice, and there's that buy side we were looking for there. I'd like to see us close above that, but if we just kind of wick here, see if we can't push up through that. All right, I'm out here. So I was actually long off the fair value gap. And I needed to get to 44.27 for 5. Closed at 44.25.75. So just a quick scalp into buy side. Because I think we'll run higher. I just don't like how we're wicking that buy side pool. 44.20 up. Good shit, brisket. So we'll see what we get here. If we can kind of form another volume imbalance while blasting through buy side, then we got potentially a chance to keep on running. Which at that point we would look for the 15-minute fair value gap to be fully closed in. Right, because right now we're hitting this premium here. Which is why I ended up closing here right at the high. Panicked because it filled on my copied, but not the lead. Oh shit. Oh, but you finally got out. Okay. I'm like, good. Yeah, I had my final thing for 44.27, but I'm like, no need to be greedy. All right, as usual, we'll just show a quick little. All right, so here, volume imbalance. Right, as we returned into the old volume imbalance we had marked out. We'll enter in there, inside the fair value gap, and exiting on the swing high. I would have been filled here. That's all right though. All right, that's one handle. Could care less about that. But we'll see if we don't give us another opportunity. How many accounts you have, Brisket, hooked up? Right, so my interest lies in this fair value gap now. We get under that. Potential quick short into, right, volume imbalance. This inefficiency. Because although the 1 minute has closed above buy side, right, if we kind of go to the 2 minute all wick, 5 minute all wick, 15, right, all wick. So we haven't got any other time frame besides the 1 to confirm the idea of continuing higher above this buy side pool. And if we only have, right, one lower time frame kind of confirming that, it's just not as a high probability. So if we can get the 2 minute to start closing above, right, and especially the 5, if like the 5 can close above and leave this volume imbalance open, that should be pretty good for potential higher prices. Yeah, the echo, okay. I was like, who is that? Tropical. There it is. Hello. That shit really is so echoey. We good, we good. He said I want a long that. Right, yeah, so this is an instance where not necessarily fully confident using the volume imbalance entry, just because we have that buy side and that premium fair value gap we're hitting. So for me, right, I just need more confirmation. So let's say that we hold here. Let's say maybe that the 1 minute can actually close. Let's say we get a 1 minute closing above. Okay, hold up. I like that. 1 minute closes above. So from here, I would want to see if that volume imbalance wouldn't actually hold us. Because we're closing above consequent encroachment on the 1 minute. The 2 minute has actually closed above as well. So yeah, I just want to see if we wouldn't continue that bullish delivery. Right, still really have that same idea for this fair value gap here. If we get underneath this now, right, close below, that kind of means we'll close below a swing point as well. And we'd have to start looking for these lower prices. If we can't hold, right, this should be, in my opinion, the bullish setup that should hold to get us above this fair value gap. Okay, so the 5 minute actually did close as well above consequent encroachment. So yeah, I would prefer higher prices from here actually. NQ taken off. Right, NQ right now relative strength leader. A lot stronger than ES. Dollar just cleared a low. Not good for that actually. Ideally, we get above the fair value gap here, right? If we can get above this 15-minute, should be pretty good to continue running. Right, I longed off the volume imbalance. Final TP is 44.30. Oh, 44.31. At this point, stop is break even. Don't like this though, that we can't actually get above that. If we can get a candle to close above, I'll feel pretty confident in that TP being hit. Hell yeah. So close above, volume imbalance created. So yeah, at this point, stop. Yeah, break even here. Take a 3.5 handle partial, I think. Actually, what I will do, if this volume imbalance closes in, right? So if we kind of negate it, I'll close one. So we're gonna give this some time to, right, pan out, play out, print, let the candle print. We have an order block here, which we've just tapped, aligned with the fair value gap. All right, so what I would want to see is this hold, volume imbalance remain open, continue higher, right? If we close this in, like I said, I'll just offload one of the contracts. And it does, but we're actually running still, so I'm going to leave that. Boom. So I actually partialed on this candle as we ran this candle's high. So now I got still that final TP, 44.31. Only worry in the world is a time gonna reach. So this week I've consistently... That's exactly what it is, brisket. You're not nervous about the outcome. And that's what deleveraging can do. Hell yeah. No, you're right. Yeah, you hit it right on the head. At least for me anyways, I know that, right? I kind of explained how I had to cut my risk for a period of time as well. And like you're saying, right, it just helped me not be so nervous, right? It allowed me to let the trade setups play out, right? So I wasn't in a rush to like move my stops or anything like that. And then once you get confident, right? Once you get real confident with that one contract to where it's second nature, right? You don't even think about it. Then you can start adding more. And then slowly just building that tolerance, I guess we'll say. Or desensitization. Get desensitized to trading with those contracts. Well, damn, brother. Partial stop and profit. Go ahead and show that. All right, so we went back in, long, sell the swing high, go back in on the swing low, volume imbalance, sell the swing high again, and then there we get stopped in profit. So just swinging here this morning, right? This is kind of my style here. In and out quick. Fell just short of that 44.31 target. What? About a handle. But that's all good. Quick and precise. I gotta show the zoom. My fault, zooms. Right, I'll share that with you guys quickly. So as I was saying, right, we went in initially on the volume imbalance, fair value gap, sold, closed it at the buy side pool. And then as we had another opportunity to add inside of the volume imbalance, we went ahead and did that. Took a partial as we ran this high again. And then, right, as we said, just got stopped here in profit. So not bad, not bad. Still playing around that volume imbalance. Notice that? Yeah, I had closed it, Cloudy, my fault. Instead of just changing it. Copy trading. Hey, that's a good way to do it too, though. B. Because that, in a way, right, allows you to still trade with, let's say, increased risk, but it doesn't seem that way. Like, say you have 300K accounts or something linked. Right, it's going to seem like you're just trading that 100K. So now we're looking pretty bearish, right? Do you see how we aggressively... So this is an institutional order flow entry drill here. Oh, wait, wrong screen. So we barely, right, we create a fair value gap, create equal highs, and then barely wick into it and aggressively reprice. This makes me think that we may want to continue lower. And this here, right, like we said last week, like we've been saying really since August started, painting outside of the lines. So we get above that fair value gap and notice, right, we come right back into it, and now it looks like we're about to close back underneath it again. Right, because even the 2, the 5, the 15 hasn't actually. So the 15 still, right, good for bearish. But these other... All right, so we didn't get a close below this low. Had we closed below this low, I would be looking for shorts here. But this looks like we're just kind of consolidating. Right, because now we have equal lows here. I don't like that. But if we were to get back above this fair value gap, we will now have an inversion. and short-term lows being cleared. I would favor, let's try paper trade. So I'm not sure which direction we want to go, so let's get some skin in it. Terrible fill, should have got filled at the fair value gap, but let's gauge market interest right now. Because notice how the wick is doing the damage into the fair value gap. But the bodies, after closing underneath with this candle, notice how that body held here. This, once again, though, was those lower probabilities because we've already hit our objective, right? Not only the buy side, but the high of the fair value gap. So now we can expect that chop, which is why we are in a safe environment here. Demo environment. I'm not ashamed to say I've been closing things a little bit earlier. Yeah, nothing wrong with that, brother. I mean, like Michael used to say, right? 3 handles, that's good enough. She basically had the same entry as me. Good shit. See, look at y'all, bro. Y'all great now. Me and y'all just be entering the same positions. Will this go long now if we hit this inversion? And I'm doing this because now say we take my stop here again, right? That's a clear-cut sign to me that we are not in a high probability environment, that we're just chopping, that we're in a consolidation phase. Because right, we shouldn't have to clear this low. Because at this point, that means we'll be going up and down through PD arrays. And as we explain, if that's taken place, right, that's kind of the signal that we are in the consolidation environment. Right, because the 5-minute is looking more bullish, holding a volume imbalance. 2-minute, very bearish in my opinion. Equal lows and holding a 2-minute fair value gap. 1 minute at the moment, undecided, we're above an inversion, but hitting now this bearish inversion. So right, you see how we have so many conflicting kind of ideas already inside of a fair value gap. Low probability conditions. I was doing the math. We're taking 2 points with 2 lots on 2 accounts. Wait, 2 points, 2 lots. See, that's the way to do it. People overestimate the amount they can make, right, in a month, and they underestimate the amount they can make, right, in a year, in 6 months, if they were to do it just consistently. All right, like my Apex account, so I started trading that one again, just seeing what we could do. We're about, how much do I need to get for profit? I think 9K. So we need like 4 more K to pass this account. And like my plan with this, right? Say we pass this account, it's actually linked to 2 others. So at that point, you got 350 Ks. All I need to do is get, let's say 2 contracts, $500, right? 5 handles with 2 contracts is $500 a day. Add that to 3 accounts, 1,500, right? You do that 3 days out of the week. At the end of the month, I mean, you're sitting nice. I need to quote that. Hell yeah, Jay. That's the way to do it, man. All right, once you can get that mind shift to you're in it for the long game, and it's just those small, consistent profits over time, that's what really builds wealth anyway. So right, you see how we got above this, so we shouldn't break below this one, right? So we'll continue to kind of feel that order flow, right? We'll add here. Yeah, exactly, BC. And I don't think anyone's complaining about 250K. And right, my plan is because with Apex, you can't even withdraw until the first 3 months anyways, right? So I'm thinking, fuck, run that account up, withdraw whatever I can, the minimum, right? The $2,000 every 2 weeks. So you see that we ran buy side here, right? So we could actually come back down to take the stop now. Like if we're in a consolidation, seek and destroy environment, buy side is cleared, equal lows resting here. Let's say if we close underneath this fair value gap, maybe we reverse the position and go short. So I kind of want to reverse that, honestly. Let's reverse it. I really do want to reverse that. Let's leave it. Let's say if we can get a fair value gap, hesitant to immediately reverse it just because, like I said, we're painting outside the lines. So this is kind of why this month I need to be a lot more confirmed to enter actual live trades. Right, like here I'm fine kind of just playing around with it, seeing where we go. But the fact that we went underneath this, right, we should have created inversion, but like we say, painting outside the lines. So we could even get underneath this fair value gap, but still push back above and through it. Yeah, NQ's 3 driving it up. For show, for show. Right, 954 swing low. 1003 high. I can just show you quick. Right, we have equal highs, still the same though, 1. Equal highs again, 2. 3rd. So we'll see if we want to keep, right, stair stepping. Or if we're gonna run that low. Come back in, create some type of model here to then break lower and keep running. So 2 possible scenarios, right? Which is kind of what I'm looking at. If we break this low, I think we go back for these equal lows here, back into this inefficiency. Which would mean, right, let's go back to ES. So you see how we're just getting held up now. All right, so just playing around these. So what we can do, right, if we close back above this, stop will get moved to this candle's low. Which technically this candle closed, yeah, see. So this is just that low probability delivery to where you see how this candle closes underneath, but then the next candle immediately closes right back above. All right, so going back down and through PD arrays. Yep, 15-minute, right, is immediate with the 5 as well. So that's what I'm saying. The 5 and the 15 look rather bullish, but the lower time frames are kind of looking more bearish. But I always kind of rely on higher time frame structure. You can withdraw. Oh wait, I'm missing questions. People on Twitter saying putting a profit target is bad. That's got to be the dumbest thing I've heard. No offense to anybody if you do that, but to each their own, I guess. That is just crazy to me. If people say that to me, or if I see someone say that, in my mind, that just means they don't know what they're actually doing. Like they may have a model, but they don't understand how price actually moves. So I'm like, what are you aiming for? Like when you get in a trade, if you don't have a profit target, what are you setting up? You know what I mean? And I think you've seen plenty of times, right, with examples from me. If I didn't have profit targets, all my trades would be losers basically, because I'm always like usually exiting on a swing high. So I'm like, if I didn't exit where my target was at, I'm just getting reversed on. Just continuing to add because I'm trimming my actual stop loss. Right, so we're still kind of risking the same amount from the original entry, but because we're creating new discounts, I'm adding there, moving the stop along with it. I think he means, oh, okay. I mean, that's fair, I guess, then. Giving yourself a profit target for the day. Still, though, either way, I'm like, yo, what? Like, for me, if I make 5% in a day, that's my max. Right, well, of course, it's not happening every day, but I'm like, that 5% is a good-ass day. So I'm like, oof. I don't even feel a need to trade. And still, I like, even if you didn't, I guess this is kind of where I think like Michael, what he's always said, right? You need something to aim for, in my opinion. Or how do you gauge, I guess, your progress? You know, you don't want crazy ass, like, I need to make 20% a month. That's wild. Right, starting at 5%. Aim for 5% a month, 10% a month, 1% a day. All right, so very glad we're just papering this, right? Because this high resistance. But once again, we know when this is going to take place. Right? If we have targets already hit, if we have already, I mean, right, don't forget, large range already off the 8:30 open. So large range so far this morning, all one-sided. Which I still would prefer higher prices. Right, this is why I understand we're sitting through this right now. If we're going to deliver into buy side, it's going to be a high resistance liquidity run up into that. So you're at the mercy of the market. This right here will be very interesting to see what happens. And we make a volume imbalance on the volume imbalance. We're just gonna load up, just keep loading up. Right, I hope you guys can see what we mean when we are explaining, right? Low probability, high resistance. So even though we didn't get full TP, you see how quickly, right, we moved from our entry to where our target was at. Right, even here, even though we did give it a little deeper retracement, right, we're just returning into the fair value gap. But you see how once we hit that discount, right, price is showing its willingness to head in that direction. Whereas right now, right, look at this. I mean, what is price showing? Nothing. This is a barcode. This is the classic barcode pattern here. Love trading barcodes. Oof, I think we're getting stopped here, fellas. Yeah, up here comes. Hey, price said bet. All right, we can tell when that's going to happen as well. This is the shit that chops people up 100%. I mean, even us, right? You saw us, we just got chopped technically. We understand it's paper, so we don't really care. That's the dangers of trading the extremes of the ranges. That shit is hideous. I mean, the bodies are whole, like, right, higher time frame still shouting higher prices to me. 515. Yeah, I'll continue to look for that. I just think it'll be high resistance. Clear the mess up. And we're still inside the actual fair value gap. But you see what I mean, right? Painting outside the lines. Here, 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 here. And I never really understood what that meant for years, honestly. When he would say that, I'm like, what does that even mean? I don't understand what you mean by that. But now that I know how to use these fair value gaps, now I see what he was explaining. All right, we're going short. Nah. To be completely honest, I have absolutely zero bias right now. I'm like, I don't know what the fuck price wants to do. But nothing wrong with that. Right, I know which PD arrays are in play, but I don't know which one is going to want to respect. So that's kind of the difference. Right, it's not so much a lack of understanding the PD array matrix, it's just understanding what the actual draw is. So I'm actually going to head to the bathroom, fellas. I'll be right back. Maybe Price will give us a better indication of what we want to do while I'm gone. Entertain yourselves. Hey. Hey, what's up, fellas? I'm back. So I went long here, right, while I was chilling, watching from the phone. Volume imbalance. All right, one hit. No, I'm just kidding. That should be crazy. But that's how it be, bro. Every time I leave, doesn't matter. I could leave for anything. That shit's gonna run. I knew that shit was gonna happen. I'm like, yo, what? I'm fucking weak. I installed. He says he knows who I am. Where are we at though? All right, there we go. There's the blast off. So we did hold volume imbalance, right? The longs, like kind of we were expecting. Right, higher time frames were shouting higher prices. Right, candle bodies were holding, consequent encroachment of that inversion. Right, same on the 15, we got that immediate rebalance. 15-minute body was holding, opened with the volume imbalance. Right, another volume imbalance here. So really, I'd like to see if we don't want to revisit buy side if we're going to be pushing like this. Right, create a failure swing here, so we can't take out the low. Maybe buy side here is the target. As usual though, highest premium, we got to be wary of that. So I'll actually go premium, we'll go buy side, and then old buy side's pool, nah. The old buy side pool is the high of this fair value gap, so I'll actually just leave it how it is. We'll see if we don't get a turtle soup here. Give another paper entry. And I don't really want, so I don't, right, this is kind of a case where I wouldn't want to see this volume imbalance actually be revisited. Because in my mind, this low to high should be balanced. Swing low to swing high, right? We come back down all the way into the lowest premium, hitting the rejection block. We spend a lot of time going up and down. So when we leave, I would really like this area to kind of be right left open, which means if I was to enter on a turtle soup, I'd be okay putting the stop, really buy that volume imbalance. So a little wider three handles, and we'd need to get all the way back up here. And NQ still just that strength leader, so absolute running. Yeah, probably should have bought right there, actually. Yep, there it goes. Pushing right open through this fair value gap would be nice, actually. Missed that. So I was long again from the actual volume imbalance. And I just got taken out here at 44.37.25. Go ahead and share that with y'all quickly. Which we might keep running into buy side, but all right, so here we had that entered on newly formed volume imbalance, and that's because, right, this is an institutional order flow entry drill. So I'm not expecting price to return any lower than this consequent encroachment, but when I see us create two back-to-back volume imbalances after trading into this fair value gap, right, that's why I'm entering here. So I'm not waiting, I'm not looking for another return into this fair value gap before entering, because I don't think it'll give one. And it didn't here, as you saw. So I'm entering right on the, just right here. Like that. Stop loss was 2 handles. Because as I'm saying, right, I don't even expect consequent encroachment of the fair value gap to be breached, which means my stop can go under that. And once again, swing high exit. So another good day. And right, you see how we have to wait for the market to show us something. And here, sure, we could play around, but I'm not gonna risk, right, legitimate capital or even prop firm, we'll say, unless it's higher probability. So in here we can mess around, but we're waiting for something obvious, significant. That was that right here. The expansion, leaving the BPR, leaving a fair value gap, institutional order flow entry drilling into their fair value gap, followed by 2 volume imbalances where we enter. And we exit, right? Like we say, right at the high. So that's pretty, we should actually keep running. Good looks. Yeah, I don't have my. I don't know if I just don't have them on or what. Oh, I only have August. I don't have July's, I guess. Jeez, I got so many drawings on this chart. That is crazy. Oh, wait. Oh, what the heck? I must not have that one. But if that's the case, 44 and a 5, that means we're bouncing right off of it. Let me go back. Let me see what you're talking about. Oh, I gotta change the thing again. What? Close. Oh, that's just the baby one though. That's probably why I didn't have it. Close on Friday. On Sunday. So usually if it's less than a handle, I actually don't mess with it. But you see we are respecting that pretty nice. We'll leave it there though. It's about to be 11, so my trading day will be wrapped up here in about 5 minutes. Let's say this stays open. Maybe I'll try to use that as a little tape read sesh. Into buy side. Because my target is buy side, right? You see it's only 3 handles. This is kind of where I wouldn't even really enter at all. Even if I had a clear cut setup, just because the actual target is too short, too shallow. Can you explain your rules for taking partials? Wait, partial stops? So you're saying like if I close positions early, you're asking? Like not actually partialing out winning positions? I just want to make sure that's kind of what you're referring to, PC. Yeah, okay. Yeah, so for me, right, I'm trying to find an example from today. So I guess here was an example. The very first trade I took this morning was here, okay? It was using this down close candle. So I had seen how we closed above the 15 and how we blasted up into this 15. So I was looking for this candle to act as support, right, and continue to send us into the targets that we've been aiming for. But because we had a swing low here, right, so in my mind, after I entered, we created the swing low, we started trading higher. I wouldn't want to see a swing low like this be violated, because then it means that we're most likely, right, gonna run lower from my stop. So if we like break structure, right, as soon as this candle closed underneath here, I just manually closed, right, instead of letting my stop be hit. So kind of rules for me is if I'm in a position and we kind of form opposing PD arrays or break structure I'm looking at, I'll look to close. So like here, right, when we got long here, had any candle closed underneath this fair value gap, right, I would have closed. Because to me, this fair value gap is the one that should hold us. So if candles are breaking underneath the PD arrays that I'm expecting to hold, right, I'm cutting my position, or at least cutting some of it. You see, we wick low, we don't actually close below it, which is why I'm comfortable holding, right? We need to wait for the actual candle to close. And ultimately we do run in our direction, which was nice. So same thing here. So like, let's say where I enter here, right? Like I said, once we closed above the fair value gap on this candle, I'm immediately moving my stop to break even, because we should not break the structure if we're going to continue running, right? Which I then get stopped in profit. So for me, I always try to, I guess we'll say, trail my stops using market structure. And if I see prices disrespecting the PD arrays I'm looking at, that's when I cut my risk. So like here, right, we're tape reading this. It's playing out like we're expecting, but let's say that we actually entered here. If I actually went long, right, it'd be the same setup. So I would have had it right here underneath this low. And for me, if I was to enter here, so we enter on this candle, if any candle is to close under the volume imbalance, right, so let me pull that up. So this might still work because we're actually still kind of playing out this structure. So like right now, right, let's say that this candle was to close under this volume imbalance, I'd be cutting my risk already, even though my stop's never been hit. So it doesn't, right, so it's not necessarily the same. But if that candle did close underneath, right, I would have cut the risk there. So you see how we can kind of prevent ourselves from having to take full stops. Hopefully that kind of answers your question. Yep, for me, right, cutting risk is closing part of the position. So let's say I went in here with 5 contracts. Okay, right, I had 5 contracts aiming for like some buy side. When this candle comes back down, right, closing inside the volume imbalance, I'm closing 3 of the contracts. So it's still a small loss, right, but it's not taking the full loss as if, right, my stop would have been here. So if I would have never moved my stop or closed any of the position, I'm taking a full, right, stop loss using all 5 contracts. Whereas with kind of the way that I like to trade, I'm never really taking a full stop because usually I'll have an opportunity to offset some of the position before the actual stop is hit. So like here's that example where like we would have closed some of the position as we're closing underneath the volume imbalance. And then we still get stopped out, right? But it's just not the full stop. So we're cutting the risk because we're not taking the full risk as a loser. And then obviously like when we partial out in winning positions, right? So like when we're here, partialing out here, right? That's still cutting risk because now we're not holding as much contracts as we were. So we can cut risk in 2 separate ways, right? We can either cut it taking partials as prices moving in our favor, or we can cut risk by closing the position manually when things are going against us. Yeah, and if I can add back, I'll look to do that, right? So like, let's say that I close here, my stop doesn't get hit, and we give us another type of setup that continues to run. I'll look to add back whatever I closed. Because more often than not, right, if I am closing like that and price doesn't take my stop and reverses and continues to run, another PD array will be formed, right? It's not just going to kind of parabolically take off, which sometimes it might, and those are the kind of the moves that I miss. To like, if say I had a stop here, right, we run that stop and then immediately just blast higher, I'll just miss that. But more often than not, it'll give you another opportunity to add back those contracts, those positions. Which actually, right, this was a great example. Let me show you from my actual, the live executions here this morning. Gotta go here. Here. Make sure everyone can see. All right, so like I mentioned, first long I tried taking this morning was here. So as we tap this down close candle. And for me, I did not want to see this fair value gap here be traded back inside of. So after we left it, especially this candle, right, wicking, immediately rebalancing, and then the next candle leaving it, I'm entering on this down close candle. So my stop goes underneath the actual fair value gap here. But I was saying I don't want to even see a candle close back inside of it. So as soon as this candle closed back inside, right, next candle I close immediately. And this is an instance where my stop never would have actually been hit, right? And that kind of happens with my trading style. That's something that I kind of got to right, just accept at this point, that sometimes with the way that I try to aggressively move stops and things like that, I may get faked out. But as I was explaining, I understand there's always another opportunity to enter. Right, so we get stopped here, right? Or I guess we manually close the stop without hitting the full stop. But because I know how to kind of read price and follow it, when another opportunity presented itself to get long into, right, my target still, then I can go ahead and execute on that one, right, into the target. And as we said, right, multiple opportunities again. So another buy opportunity, partialed out, stopped in profit. Then we have to wait, right, because we have no opportunity in here. Wait for the next obvious signal. That comes here. So we get long again, exit on the swing high. And now we're just really playing around where we exited, right? We're at the exact level that I exited on. So right, you can kind of see how, even though I'm not able to partake in the original position, I could still find other opportunities to enter because price never delivered into the actual target I was looking for. Screen is black. Oh my God, the whole thing, and I gotta redo it. All right, zoom, my fault, let's go. Can you see it now? Oh, wait. What the hell? All right, zoom, can you see it? Can you see it? You can see now. Okay. So right, this was the entry I was explaining here, PC. So kind of exactly like you were talking about, or that we've been talking about. I entered on the down close candle. Stop was under the fair value gap. Didn't want to see any candles close inside the fair value gap though. So as soon as we did here, right, we're closing on the next candle. This was an instance where the candle though actually never took my stop, right? So I was prematurely closing it, but that's okay because as I mentioned, right, once the next opportunity presented itself, we can get long, we can get long, we can get long into our final target. And this one was just a simple, so the YouTube model, short-term low cleared, broken, fair value gap, right, paired with volume imbalance for entry. Second one, right, same thing. We came back into a discount fair value gap. We hold, we respect that. We break structure while creating a new discount, enter on the volume imbalance, partial out at a high, stopped in profit, sitting through consolidation, right? Same thing. Now we create the YouTube model, short-term low cleared, returning into a discount, displacement higher, BPR here. Remember from this candle. So we're not expecting price to return back into this. So when we see the institutional order flow entry drill, followed by volume imbalance and another volume imbalance, entry came off this volume imbalance here, anticipating that the volume or that the fair value gap here isn't going to be fully traded into. So that's why I'm entering here and not waiting for a touch of this fair value gap. And you see, right, we don't even come back. So if I was waiting for a touch here, I would have missed that. But because I understand kind of order flow, we enter here and then we get out just at the high of the this premium that we're at. And you see how it's kind of reacting as of now. So yeah, that was our morning. Before the opening, there was a breaker, but entry could be only before opening. Is this entry to avoid or possible? Before the opening, there was a breaker. Okay, hold up. Before the opening at 9:30, I'm guessing you're saying there was a breaker in the form of, let's see, high or low, high, low or low. So I would see the breaker as here. We close above it. What time? At 9:30. We actually don't even hit it. So with this breaker that I'm pulling up here, we actually get real close, but we don't hit that. But for Eddie, I necessarily wouldn't enter right off of this because it is the 9:30 open. Right, what I would have done is wait for confirmation. So I would have waited to see that the 9:30 wants to respect this breaker here, right, which we do get. We don't even actually return into it. Instead, we just kind of hold the volume imbalance right above it. Right. So as I would have seen price, right, due to swing down, respect the discount, blast higher, and then create a new fair value gap, right? Also in line with this midnight. Yeah, midnight. That's real clean, right? So we're blasting above the midnight level with a fair value gap. This is where I would look to enter, right? Using this fair value gap here. Because in my mind, we have already confirmed the idea of going higher. We've done all the work we need to do to go lower. And we're above the midnight, so that midnight should offer us support as it does. No problem, Eddie. Glad to help out. Finally filtered down NQ. Hey, about time, B. Let's see. What you mean? You're trading this right now? You're trading the barcode? Or you're already out of position? Or you're in a position? Oh, right here. There. 1106. Oh, interesting. I'm blind? What? Oh, right here? I'm like, where are you? I can't find the entry. You're better than me. I'm like, what? Hey, I'm glad you enjoyed it, Brisket. Good night, my dog. Get some rest. Yeah, we'll wrap it up here, honestly, right after our trading window. Already got plenty this morning. Damn, if you're long, though, B. Good for you. Which I think that, which is what you're saying. 1106. Reversion, inversion, brother, inversion. He said, damn, it's all right. I was just like, reversion, that's new. Got your own concept. BPR in the fair value gap in the volume. Yes, sir. See, Cypress? See why knows. He said he don't even need to be here for the whole stream. I see what you mean. Okay. I was like, what? So you went short. Ah, that makes sense. I was looking for longs. Skilled fives and all out. Hey, bet. Okay, fuck yeah. Good shit, my dog. Dub. Breaker. Low, high, low, low, broken. I mean, yeah, I still favor this buy side here, but if we hit that, that'll be without me. I am content with our morning here. 1, 2, 3 winners, 1 small loss. That's about the average there. Ah, I see, B. All right, that's fair. Hey, it worked out though. A good trade, my dog. Hey, you too, Kraken. Or actually, I'll message you and send you the video. But I had read your message this morning, and the one person that I learned a lot of it from, right, my options trading, just to kind of understand, because I'll say I use ICT's price action, I guess, concepts, right, as far as analyzing, but kind of understanding how options work with like the Greeks and the deltas and all that nonsense. There's a guy named In the Money. Right, if you look him up on YouTube. Let me, wait, be sure. Yeah, that's what his name was. But his name is In the Money. And I basically watch all of his videos on just, right, options, how to figure them out and whatnot. I'll send you the link though to his YouTube. Because once you figure out like the Greeks and whatnot, it's really pretty easy. Because you're just still reading price. So I do it a little more of a, right, it's not like this 1 minute trading I do with futures. It usually stems from, right, an hourly or a 15. So I still look for really the same structure points, right, the same PD arrays. I just execute on them on a higher time frame because I'm holding for longer. Yeah, fellas, with that, we'll go ahead and close today, right? Quick recap, quickly, just in case anyone missed. L off rip, winner, fair value gap, YouTube model, volume imbalance, right, inversion. Second winner, volume imbalance after holding a fair value gap and breaking above buy side pool. Pushed it out at highs, stopped in profit. And then third winner came off of volume imbalance after institutional order flow entry drilling, right? Got out at 5 handles right at the high of the fair value gap, right? So exiting on that swing high. And as I said earlier, we're still just, right, we're once again at that same exact level. So really this was kind of the main exit point. And you see how now we're just referencing that level, going up and down through it. So not bad, not bad. Tomorrow we will be back at, I want to say normal 9, what time? Childless. Yeah, so tomorrow we'll be back 9:30 Eastern, right? So we'll just come back for you for the equities open. High impact news at 8:30. So we'll let that play out and see what we get. But yeah, we'll leave you guys with that. Until we come back tomorrow, enjoy the rest of your day, everybody. And we'll talk in the morning. See you guys.